prediction markets, there is a massive contradiction hiding in plain sight.
$30,336,252. That's the amount of money being wagered right now on who the Democratic nominee will be, not for this election, but for 2028.
So what is the multi-trillion-dollar risk that this market is completely ignoring? That's what we're going to break down.
All right, first up, let's talk about the main character in this whole story, the political market and that insane $30 million wager.
Look, this isn't just a couple of people placing some bets. We're talking about over $30 million in volume. That is a huge capital allocation. It's the market basically screaming that it believes in a stable, predictable political future. A future where today's frontrunners, like Gavin Newsom, are still the most likely bets years down the line.
And this is the key takeaway here. A bet of this size, it's way more than just a prediction. It's a powerful signal of market consensus. It means a giant pool of money is expecting the system to just keep on chugging along as usual. No major shocks, no disruptions between now and 2028.
But here's the thing. That exact assumption of stability, it leads us straight into a paradox, a really glaring contradiction that's being priced right into the markets for the Federal Reserve chair.
Okay, this is where it gets really interesting. You've got two markets that are deeply connected, but they're telling completely different stories. One is predicting who Trump will nominate as the next Fed chair, and the other is predicting when the current chair, Jerome Powell, is going to leave. And trust me, the numbers just do not add up. Let's put the numbers on the screen. The market is giving us 74%. That's a 74% probability that Kevin Hassett will be Trump's nominee. But at the same time, it's only pricing in a 16% chance that Powell is out before his term is officially up. So, how can both of these things be true at the same time? Which one of these markets is getting it wrong?
The logic here is pretty simple, cause and effect, right? A new administration, well, it's highly likely to replace the sitting Fed chair. So, a 74% chance of a new nominee should mean the odds of Powell leaving early are also really, really high. Definitely not 16%. This is a huge disconnect. The economic market is basically plugging its ears and ignoring a crystal clear political signal. If you're finding this valuable, drop a like and share.
But there is one little corner of the market that is pricing in disruption. And you can find this political wildcard hiding out in the crypto markets. Make sure you subscribe to the YouTube channel so you catch these signals as they emerge.
Now, when you first see this, it looks like nothing. A real long-shot bet with just a 4% chance of happening. Will Trump create a national Bitcoin wallet? It looks like random noise, but the story here is not the probability.
The real story is the volume. Get this, over $2.6 million is betting on this 4% long shot. That is a ton of capital, chasing what looks like a very low probability event, but one with an absolutely massive impact if it happens.
So let's be super clear here. $2.6 million is not random noise. This is smart money. It's positioning itself for a major political shock to the economic system. It's betting on a future where politics intervenes in the economy in a radical, direct way, the complete opposite of what that $30 million consensus bet is telling us.
Okay, so let's put all these puzzle pieces together and figure out what the macro signal is. And for more updates like this, make sure you follow us on Twitter.
So, what's the big picture here? You've got three key signals, and they're all pointing in different directions. The main political signal, over $30 million betting on stability. The economic disconnect, the Fed market is just ignoring obvious political risk, creating a huge vulnerability. And the outlier warning, that multi-million-dollar crypto bet is a flare gun signaling the potential for a massive systemic disruption. So the market isn't wrong, it's just divided. It's pricing in two completely different futures at the exact same time, one of stability and one of chaos. And this brings us to the core risk, the central question of this whole thing, this massive disconnect between the political and economic markets. With that crypto bet acting as a canary in the coal mine, it leaves us with one critical question. Are the markets really prepared for a major political shock to the financial system?